Hey traders, Raghee here, and in this video we're going to talk about how miserable can one stock make the market. We're going to discuss a little bit about earnings. We're going to discuss a little bit about Tesla and the Twitter drama unfolding and high concentration weighting. High concentration weighting is everything. Whether you're playing sectors, whether you're playing indices, there's no getting around it. And that is why it's so important for futures traders and ETF traders and really all traders to understand where certain stocks are weighted within the broader averages. So we're going to take a specific look at the NASDAQ here, but realize that a lot of this is going to influence the S&P as well. And why is that? Well, it's Tesla. Take a look at the move in Tesla today. Now, first of all, Tesla had earnings, and I got to say, it wasn't a huge earnings response. In fact, we saw the move higher, and then Tesla just moved back down into a range that it's been sitting in for a while. And Tesla today moved lower, and right now is testing the 200 exponential moving average, also the 200 propulsion. And this is a significant shift in terms of a break of that equator. I'm not convinced it's a break that's going to see acceleration, but we have to wait and see. But Tesla's movement lower, likely because, traders are what? Investors are what? They're concerned that, how is Elon Musk going to fund this purchase of Twitter? And, I'm sure there's some question about taking his eye off the ball. Twitter is not going to be something that traders are going to be happy that he's now dividing his attention between SpaceX and Tesla and now Twitter. So who knows? But there was nothing that was going to come good out of Elon buying Twitter for Tesla. One way or the other, it's going to take it negatively. And again, we can see that that's what's happened. However, what's really interesting about this move is that it's counter the trend that preceded it. And Tesla's been in a neutral market, not in an uptrend, but it's been in a neutral market since the 14th of April. And despite the move lower, it's still in a neutral market. It's still in a yellow neutral environment. And so that tells me there's a potential for a fade. But any market that's had an outsized move to the downside. Now, one of the tools that I use consistently is an understanding of historical volatility. I'm going to show that to you right now. This is Tesla's price movement range by day of week. Now, on average, we're going to look for Tesla to move. Again, on average, as little as 50 points to almost as much as 60 points per day. So 50 to 60 points per day is sort of the average. On the upper end, it's almost 70, right? So that's average. What was today's move? 125. So today was a 2x move. After we got past about 70 points, we knew Tesla was outside the historical norms for movement. We know we have a day that is not a normal day. We have a candle that is a larger than historical volatility candle, again, using the measuring stick of about 50 to 60, almost 70 points. So we can be very accurate, very precise about where Tesla starts to behave in a way outside its norms. As soon as it sells off 50 to 70 points, we know we're starting to get beyond the historical volatility. Once we know that's the case, rather than just stepping in to buy the 200 here, we'll look for a minor low or an inside candle. But what does that mean to the NASDAQ, right? How can one stock make the market this miserable? It's waiting, gang. It's waiting. Within the NASDAQ, Tesla is 5%. So an outsized move, and I don't say outsized the way we go fishing and say the fish was this big, right? We're using the measuring stick of historical volatility. A stock weighted 5%. It's the fourth heaviest weighted stock within the NASDAQ. And a disproportionate move, 2x the historical volatility, we're going to see a reaction in the NASDAQ. We're also going to see a reaction in the S&P. Now, why the S&P? Well, we know that Tesla was added to the S&P. And so now that movement is going to have an impact. How much impact? Well, we think about the weighting. Tesla is 2.3% of the S&P. And just by comparison, Amazon's 3.5%, right? So it's a significant weighting within the S&P. So one stock, a tail, can wag the dog, gang. We're in earnings season. So we're already in tail wags the dog season. And boy, is it going to be an interesting week, because Tesla has this Twitter news in terms of volatility. And then we still have a number of high impact equity releases to come. In fact, when you take a look, I like using the Estimize, because when I'm playing earnings, when I'm looking at the impact on the indices and on the sectors of an individual stock, I'm looking at a whisper number for revenue. I'm looking at a whisper number for earnings per share. And that is what I'm going to base the reaction of the market to. And the best whisper numbers that I've ever found are just at Estimize. Again, there's a free version of this as well. I just like using this site. But I am a subscriber, so you're looking at the subscription view. Take a look at Tesla, right? We already have the data out about earnings, but then we have Google, Microsoft, right? The hits just keep on coming. Facebook. So when we start getting these earnings impact on the NAS, this is where I'm going to get crazy, all right? And this would apply to the S&P as well. Could we see a bounce? And I'm not talking about an uptrend. Please hear me out. I'm not talking about all of a sudden, happy days are here again and we're moving higher. I'm just talking about an oversold, neutral market bounce. That is it. 13,000 isn't important, right? I'm a big fan of psychological levels. I talk about them all the time, right? But is that 13,000 on the NASDAQ really all that important? When I look back on the volume for 2022, it really isn't. Volume is pretty darn thin down here. So it's not surprising that NASDAQ was able to cut like a hot knife through butter through very thin volume. Clearly, we've broken two Darvis levels. We've broken the 13,000 level, but is it super meaningful? Or if we can get, again, a minor low or an inside candle, could that set up an oversold bounce, right? And I'm not just saying step in and buy the NASDAQ, but what I'm trying to say is don't short this either. Don't just blindly step in and go, well, I'm going to short this now. Look at that sell-off. Be very, very cautious, because we could get a bit of a little sigh of relief rally, especially with the kind of earnings that are coming up. And then that would be earnings. And this is the technical. Gang, when we come into earnings season, we come into this tail wags the dog season, earnings don't give a rip about our secret squiggles, right? They don't give a rip. Did Microsoft, did Amazon, did Google, did Facebook, did they beat the earnings per share whisper numbers? Did they beat the revenue whisper numbers? Not the guidance, not the Wall Street consensus, but the whisper numbers that are tweaked right up into the day of earnings. That's what I keep an eye on. That's the game, gang. Not what has happened in previous quarters. Not that. It's how did the actual reflect against what was discounted. So we want to keep an eye on that. Oversold, stochastic, dramatic move to the downside. Look, did the NASDAQ have a dramatic move today? You might say, wrong. Is there an idea that maybe Tesla or the NASDAQ could pause? Was this an overreaction? A 782 range day. Well, I can go back and take a look, right? This is where the historical volatility is so powerful. Okay, let's take a look at the Qs. I love breaking this stuff down with you all, and I super hope this is helpful. I hope that this is a way of looking at the market, maybe that you haven't looked at before, that a down candle is not necessarily indicative of a downtrend, and that there are certain days that are so volatile, they may not necessarily be sustainable to the downside. So actually, let's pull up the NASDAQ futures. What's the typical movement? About 450, 460 points. So you can see just how out of the norm today's move was, right? And oftentimes these kind of outsized moves are not necessarily the reason for further downside. A lot of times they create an environment of chop and or a potential bounce. Case in point, look at this outsized move on the 24th of January. Look at this outsized move on the 24th of February. What's with the 24th? Right? Another one here. That's a pretty decent sized move. Not great, but those two are really big moves. And that really looks a lot like the 26th today. So I'm putting these ideas out there. Hopefully this kind of gets you looking at the way you're currently treating this market and maybe just gives you another perspective. Okay, if this is helpful, smash that like button. If you're still confused about any of these topics, please leave a question or a comment. Join me for Charts and Coffee Monday through Friday, 9 to 9:20, right up here at the Simpler Trading YouTube channel. And I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.